everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering 5 stocks with ex-dividends October 30th through November 3rd, which is next week. Now, going forward, this is the standard that I'm going to be setting for the content provided on Wednesday for my 5 stocks with ex-dividends next week. I will be writing up an article on my website, the financial-investor.com, releasing it during the day, and then of course I'll be doing a recording at night and then releasing it Wednesday morning. The article is online if you guys would like to take a look at it. It will be in the description below. I can't post it yet in the icons in the top right corner of my video because I have to reach 10,000 views, so I haven't done that yet, but am well on my way. So of course, if you do go to my website and check it out, if you find it interesting, if you have any friends that are also investors or really like dividend stocks, go ahead and share this to your Facebook, your Twitter, your Google, and so on. So that is it. And let's go ahead and get into it. Of course, if you are brand new to my channel, I do make financial, stock market, and investment videos weekly, so do consider subscribing for new content. So here we talk about our 5 stocks with ex-dividends next week. My first pick out of the list of stocks that are coming out next week is ticker symbol TXN, and that is Texas Instruments. So Texas Instruments engages in the design, manufacture, marketing, and sale of high technology components in the United States and internationally. Their ex-dividend date is on Monday, October 30th, so you do need to buy this stock Friday or prior. Its pay date would then be on 13 November. Looking at the graph data shown here, we can see that they pay out 62 cents per share. Their current stock price is $95.86. And their current yield, their dividend yield, is 2.09. Texas Instruments, when charted, it shows that the current stock has a higher price to yield, which would indicate that it is currently overvalued at this time. The stock is under in the industry price to earnings ratio, but it is over in the sector price to earnings ratio. It also has a 60% payout ratio, which is exactly where I like to buy or below, and it's had dividend growth at 13 years, so I would consider this stock semi-recession proof. As you can see here in the data shown, its current stock has a price to earnings ratio of 23.58, the industry average is 24.06, and the sector average, I believe it's in the retail sector, so it's 16.3. Its dividend yield for the year, or at this current time, is 2.59, and it does differ from the chart shown here. So it shows 2.09 here, but 2.59 down here, and that could be due to they had just increased their dividend, or I mistyped that. So it's more than likely that I mistyped this, and I will check it and correct it. Its annualized payout is $2.48 per share, so if you took 0.62, multiplied it by 4 quarters, you would get $2.48 for the entire year. Its payout ratio is 60%, as we discussed, and dividend growth for 13 years, meaning that it has paid out during the last stock market recession back in 08-09. The next stock that we're going to cover is ticker symbol AOS. It is A.O. Smith. A.O. Smith is one of the world's leading manufacturers of residential, commercial water and heating equipment. It offers a comprehensive product line featuring the best-known brands in North America and China. Its ex-dividend date is again October 30th, which is Monday. You would then get paid on 15 November. Looking at the chart information here, its price is sitting at $61.53. It pays out 14 cents per quarter per share, and its current yield is 0.88. So this is actually a very low yield. So it could be looked at as more of a growth with a small dividend yield similar to Nvidia and Apple. Let's see here. When charted, it does show that the current stock has a higher price to yield, which would indicate that it is overvalued at this time. The stock is over in the industry and sector price to earnings average. It is below 60% payout ratio and has had dividend growth for 11 years, so I would consider this stock another semi-recession proof stock. Its price to earnings is currently sitting at 31.27. the industry average is 29.39 and the sector is 16.3. Its dividend yield is around 0.88, 0.91%, so it is a fairly low dividend yield. You can see that they pay out only 14 cents per share compared to their stock price of $61.53. So annualized, if you multiplied 14 by 4, you would arrive at 56 cents per share per the entire year per share. Its payout ratio is very low, 26.5. So I would consider, again, it's more as a dividend growth stock. They have a lot of growth potential, but at the same time, they do pay a little bit of dividends, such as Nvidia, Apple, and similar stocks to those. They have a very low payout ratio, below 30% normally. They've had dividend growth for 11 years and considered semi-recession proof. The next stock is ticker symbol LNT. And this is Alliant Energy. Alliant Energy is an energy services provider with subsidiaries serving approximately 1 million electric and over 40,000 natural gas customers. It providing its customers in the Midwest with regulated electric and natural gas services is the company's primary focus. So its ex-dividend date is again on 30 October, which is Monday, and you would get paid out on 15 November. Taking a look here at the chart information, its stock price is very high, considering the year. It's reaching its 52-week, it's 52-week high. So it actually hit its 52-week high probably this week, and it's cooling off a little bit. So it's sitting at $43.48. It pays out 31 cents per share, and has a dividend yield of 2.85. LNT, when charted, it shows that the current stock has a higher price to yield, which would indicate that it is overvalued at this time. The stock is over in the industry and sector price to earnings average. It is over 60% payout, and it's had dividend growth for 11 years, semi-recession proof again. So here, it's the stock price to earnings ratio is 25.71, the industry average is 12.04, and the sector is 16.3. Its dividend yield is 2.9, around 2.85, 2.9. It pays out $1.26 per share for the entire year. So if you took 0.351 multiplied it by 4, you would get $1.26. It does have a higher yield, or a higher payout ratio than 60. It's 62.7 and has had dividend growth for 11 years. Now the next stock here, I was actually reading into this one after I did this. Hasbro, its ticker symbol is HAS. Hasbro Inc. is one of the world's oldest and largest toy makers. The company manufactures, markets, and distributes toys under the Hasbro, Playskool, Tonka, Tiger, Milton, Bradley, Parker Brothers, Nerf, Tinker Toys, and G.I. Joe brands. Its ex-dividend date is Tuesday, so you could actually buy it on Monday or prior, and you would then get paid out on November 15th. This stock recently released their earnings, which you can see here. They took an 8% dive, but they have released pretty good earnings for going on in the future. So they pay out 57 cents per share per quarter. They have a dividend yield of 2.34% right now, and their stock price is 92.21. So Hasbro, when charted, it shows that the current stock has a higher yield to price, which would indicate it is undervalued at this time. The stock is under in the industry, but over in the sector price to earnings average, below 60% payout ratio, and has had dividend growth for 7 years. So here we can see that it's currently sitting at a price to earnings ratio of 19.69. I don't actually consider that bad. The sector average is pretty low in retail because, as you know, lots of retail companies have been hit, so it drives the sector average down. But overall in the industry, it is well below the industry average, and the sector average it is slightly over. Its dividend yield is 2.47. Annualized payout is $2.28 per share. So if you took 0.57, multiplied it by 4, you would get $2.28 per share. Its payout ratio is very low, below 60%. That's sitting at 45% payout ratio, and has had dividend growth for 7 years. Now, I did actually take a look at it, and I was actually reading their website here. I'm on their investor website here, and taking a look at their current net earnings and release, they actually have a lot of specific categories and such, which, you know, I was actually amazed at how much they actually have out there that's actually contributing towards their revenue and their growth and such. They have a lot of products I didn't really know that they had, so I found that really interesting. I'm still reading about it. So, and then our fifth stock with the Ex-Dividend next week is ticker symbol CASY, and this would be, I'm going to call it CASY's General Store. CASY, we'll see. CASY's General Store operates convenience stores primarily in Iowa, Missouri, and Illinois. As of April 30th, 2007, the company operated a total of 1,463. I'm going to say CASY's. CASY's just looks better. CASY's General Stores, of which 1,448 were operated by the company and 15 were operated by franchises. Its ex-dividend date is again Tuesday, October 31st, and its pay date would be 15 November. In the chart here, they pay out 26 cents per share per quarter. Its dividend yield is pretty low. I think it's one of the lowest ones that we're recording this week. It's 0.86. Its dividend price, or its stock price, is $113.86. And when charted, it shows that the current stock has a higher yield to price, which would indicate that it is undervalued at this time. Stock is under in the industry, but over in the sector price to earnings average. It is below 60% payout and dividend growth for 14 years, semi-recession proof. So you can see here the price to earnings for the stock is 26.85. The industry is 36.58. The sector is 16.3. So this is retail again. A lot of these stocks that I included here, the sector for them is retail. So they sell stuff. You know, they sell a lot of items. Texas Instruments, they sell stuff. So that sector, let's see here, AO Smith, they sell, manufacture residential and commercial water heater equipment. So that sector here is retail, 16.3. So that's why that number repeats throughout my entire article here. Let's see here. Dividend yield is around 0.91, 0.86. Its annualized payout is $1.04 per share. So if you took 0.26 multiplied by 4, you get $1.04 per share. Its payout ratio is very low, 24.1. Dividend growth for 14 years. So this stock, it's similar to the other one up here that had a very low dividend yield. It's considered a semi-growth dividend stock. So they feel that they're reinvesting a lot of their revenue, their earnings back into their company in order to grow and build themselves up. It's a general store, so I'm sure they're taking a lot of that money and trying to branch out, create more businesses. So if I were to pick, okay, so let's just quickly recap. So TXN, Texas Instruments, AOS, AO Smith, LNT, Alliant Energy, Hasbro Inc., HAS, and CASY, CASY's General Store. Now, of the ones that we covered, CASY's General Store looked undervalued, Hasbro Inc. looked undervalued, and the other remaining three were considered overvalued. So if I were to pick one of the undervalued ones to take a look at a little bit further and see if they're a buy and consider buying into their ex-dividend date, which is on Tuesday, I would definitely take a look at Hasbro. This could be a very good stock with a good bounce back. Take a look at their quarterly earnings that was just released. You can check out their website at investor.hasbro.com/financials.cfm. That's what I'm kind of on right here. You can just click on their reports, revenue, net earnings, and earnings per share growth for the third quarter. So that's what I was kind of reading here. I'm not going to go ahead and get into it because I've barely started it myself, but I do want to take a look at all that they have to offer and then take a look at their annual report for 2016 and what they had going forward. So that is it for this video. Again, if you are brand new to my channel,
I do make stock market, financial, and investment videos weekly, so do consider subscribing. I want to thank every single one of you guys for watching. Of course, my subscribers are out there. If you are, subscribe, thank you very much. If you are not subscribed to my channel, go ahead and hit the subscribe button below. If you have any friends that are interested in investing in the stock market, getting into dividend stocks, it's a very good, easy, solid entry point. Don't try and spend all your money trying to get invested in the stock market and buying a share of Google, Amazon, or AMD. You look at Google and Amazon, and those stock prices are very pricey, so they're hard to get into. You can get yourself a couple dividend stocks, and you can see a little bit of cash flow coming in. It'll make you happy. So it is a very fun and interesting style of investing. If you do find my article interesting, go ahead and visit the website, share it off to your Facebook, share it with your friends. And I do want to thank you guys for watching up to this point. If you did like the video, hit the thumbs up button below, and please remember to subscribe. If you have any questions about anything in the article, if you think it can be improved in any sort of way, go ahead and leave it in the comments below. I take all criticism positive, and of course, thanks for tuning in, and I will see you next time. Bye.